Not that it's really a picture that everyone wants to see, I suppose. But there you go. As I say, thanks for joining me for Trading Buddies this Thursday edition, which is on the 17th of August. Let's get stuck in and see what's going on around the place, shall we? Starting, of course, with our good friend gold. Who's our good friend at the moment? We're having a fine old time trading gold, and they're paying us to do it. What more could you want? Okay, on the hourly chart, it looks to me as though the breakout for today has already occurred, which is a sad thing. Could have waited another, hour? That would have been good. But let's investigate. So we've got and those of you here for the first time, of course, won't know what I'm talking about. So let's just explain that a little bit. What we're attempting to do here with gold is trade it as a breakout on the open of London session, which of course is only minutes away from now. And what we do is isolate Asia session, which starts on the second 1 hour candle of the day. So we find the low of that range, which of course is the low of this bar, and the high of that range, which of course is current price, or very close there too. In fact, it is the current price right now. So that's the range. And what we attempt to do is catch the breakout of that as London opens, or any time thereafter, if you like. What is very, very difficult, of course, is when we're at the top of the range to trade it. Don't like it, especially if we're at a support or resistance area, which we are. So I really wouldn't like to be trading this long today, let me rephrase. Wouldn't like to be trading this as a breakout long today. With those circumstances, the reward would have to be up here at DR1, which means you've got to go through this resistance level and that resistance level to get there. On the downside, different story entirely. We've got oodles of space underneath here yet. And I don't really take this into consideration, but you can see that gold has been on an absolute tear to the downside. Not complaining, of course, because we are trading it, but what is difficult as a result is that we are due a pullback. So I'm not going to trade this today unless it pulls back very, very substantially in the next minute or so. But let me check. And again, for those of you here for the first time, welcome, first of all. But I can't trade at the top of the range. If it pulled back into here right now, I'd be happy, but it hasn't. The reason for that is to avoid this sort of thing happening. You don't want to be caught in the crossfire or the whipsaw. You want to be in the middle here somewhere so that you can withstand that before you enter the trade. Let's monitor it anyway and just decide whether we are going to look at it or otherwise. Probably wouldn't be so bad if it closed above the daily pivot, but it looks like that's not going to happen also. So I hope you see my reasoning for not wanting to trade this as a breakout today at these levels. Okay, very, very close to the new candle, and it's settled bang on the daily pivot. Who said the daily pivot isn't? Nobody. Nobody said the daily pivot isn't relevant. Of course it's relevant. Very, very close to a change, and okay, it's getting a bit above there. Interesting. Right, there's the change. So the high of the range is there, which is actually above the resistance area and above the daily pivot. That's interesting. But I wouldn't like to trade it now because we've missed the entry. What I would like to do is, as a non-breakout trade, wait for this to pull back. And if it did pull back, say to this former resistance area, then I'd be happy to trade it long, certainly up to DR1. So if you want to monitor that, that's the trade that I would like to take today. It could just go, of course. And like I said before, it is certainly due a pullback. Righto, so let's update that for those of you who have been following this gold trade that we've been in since here, which is 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, did this on the weekly, didn't I? Yes, we traded on the weekly. So we've been in for 1, 2, 3. This is the fourth week we've been in this trade. And I have tightened my stops up substantially, having taken 2 lots of profit. That was our second lot of profit there. And now I've got my stops at where? 1911. 1911 is where I've got my stop loss. And if it hits there, look, how can you be disappointed? You can't be disappointed with the trade. But I think we've got enough protection for a pullback, certainly not a reversal. So the pullback, if it comes to the breakout area, which is here or even here, if we get the pullback to there, then we should be okay. And if that is the case, on the daily chart tomorrow, and obviously if we don't get taken out, I would place another order underneath this bar, which is where the bottom of our range is today, right? And put my stop loss wherever it finishes above it. I want to point out a couple of things which are the word won't come to me. Interesting is not the word I was looking for, but it is interesting. If you have a look at every single one of these bars, daily bars I'm talking about, on gold, since it started this last leg down, every single day, price tests a previous level, whether it be the high of the previous bar, the daily pivot, 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 every single day on gold. That has happened for the last, 10 days by the look of it. But even more so than that, if you look at where price has actually retraced, if you like, or, I suppose you'd call that a retracement. Not only is it the daily pivot, it looks to be a little bit more than 50% of the previous day's bar. So this one certainly more than 50%, this one certainly more than 50%, this one about 50%, this one about 50%, this one more than 50%, this one more than 50%. So if that continues, that sequence continues, then certainly we're going to have a test probably around about the open of yesterday's bar. Okay, buddy.
Hi, buddy. Sorry to cut in. I have a trade. If anybody's interested.
Okay. Trade trumps me. Go.
Okay. Let me just show you what I got. Okay, 1 second. I need this. Right, couple of things really actually. So the trade is in the Kiwi yen as a short. Now I don't know whether I've got. No, I don't. Unfortunately, there are pivots here. You guys will have them on your charts. Actually, let's put this here. That should be all right. Interesting that the pivot is actually in a different place. What's this? Oh no, there we go. Let's get rid of this one. I think it's this. Where's it showing on your chart, mate? It's a Kiwi yen short. Pivot showing just above price here.
Hang on 2 seconds. Kiwi yen. I've got the daily pivot at, just above price.
Cool. Okay.
Or what is it?
Let's get rid of this.
86.81.
86.81. That's good. Okay, so we're at 86.74 right now. with the price action. So yeah, just looking for a move back down again. It might be here that we get to, but if you look at this on a 15, there is some decent resistance here. You know, you got the pivot, and you've got the trend line. I'd still probably be interested in a short right the way up to this point here on this. So there is a possibility of a short. Stops really are going to be above this level here, or if we see a close above this point here, then it would have to be stopped out. Now the other one that's not quite ready yet, which I'll cover very quickly, and then I'll pass it back to you, is the US 100, and the US 100 I'm interested in a long, and with the US 100 I'd just like to see it just come back a little bit first. This one is almost on top of the price. It's not quite there. If you look at this on a 4-hour, there is a price point just down here. Now we've currently got to around about, it's about a 1%, it's about another 1% drop in price, which means to me that if we were to trade this, let's say we're looking at this, you can see down here, look on the daily, it's a lot clearer. Really good resistance there, really good support there. So that's the price point. Now it could stop here, and really what I'm looking for with a NASDAQ, I am looking for a bounce here, and I wonder whether we might even get a decent bounce right the way up to this trend line here. Which should, if I can bring that in, there we go, which should coincide with the monthly pivot. If we have a look at that, if I've got my monthly pivot, where is my monthly pivot? It might be in a weird color.
It's at, oh, sorry, you're on different, what are you on there?
I'm on the US 100.
Okay, I haven't got that here.
That's okay. I'm going to put it in red. So my monthly, it's all in black. Monthly pivot's up here. You can see sort of when you look at this on a 4-hour, monthly pivot's up there. So I think that is a possible stretch. And the way I'd like to play this is I would quite happily take on a position here. You know, just in case it's not going to drop that little bit further. I think it may. So I wouldn't put the whole thing on. I just like, you know, when I look at this, I see a potential inverted head and shoulders. Now, of course, the inverted head and shoulders on a 15-minute chart is nowhere near as strong as the longer term time frames. But what's that mean? You still there? No, we've either lost Jeff, or we've lost. Oh, sorry, mate. Just lost you for a period there.
Okay, cool. Sorry, had you finished? Had you?
Oh no, just to say that that there's a potential inverted head and shoulders here on the 15. So I'm just looking for a pull back into here, and then I'll be interested in taking this one onto the upside. And the idea with this one would be to, you know, maybe hold it for a longer period and see if we can get right back up to this, near this trend line in this monthly pivot. It's going to be somewhere in that area. Now, because I think there is potentially a little bit a move down here, I'd be quite happy to take this price, but I'd want to stop probably 1% below this area, which is going to be around about the 1570 area for a stop down here somewhere. So one position on the inverted head and shoulders, another one here, but stops down here. Now, if stops are down here on the first position, that's going to be around about a 2% stop loss drop. But there is potentially 5 to 6% to the upside. So I think that this could be a 3-to-1 trade, but you know, I'd want sort of like relatively wide stops just to kind of make sure. Now, the reason that I'd be trading this over the long term is that this is a daily chart, and we've seen this come down day over day over day, and it's going to be very difficult to pick the exact point down here on a 15-minute chart. So I'd quite happy to enter on a 15, but really what I want to see is a push back to the upside after the 15 minutes is played out. So sorry, a push back to the upside, but really sort of like creating a an hourly or a 4-hourly kind of signal. But I'll happily enter on a 15 with just some reduced risk, with a stop. As I say, stop's going to be all the way down here initially, but it's looking for a 4% move to the upside.
That'd be nice. 4% sounds good.
Yeah, but it's going to be a 2% risk, not 2% of the account, but a 2% move in the Nasdaq. I'll be looking at a 2% move, protection of a 2% move down, but a 4% move of the price in the Nasdaq. So the actual trade would be a 2-to-1. It wouldn't be a 4-to-1. So yeah, they're the ideas, mate. Just Kiwi yen short and the Nasdaq long. But it might take a little while to play out. I don't know if you want to get to the market dynamics just yet, or whether you want to kind of finish your analysis. Oh, actually, before you do that, gold as well is, for me, getting very, very interesting as a buying opportunity as well. I see this on a 4-hour as well, and if you look at it, it's a bit clearer on the 4-hour, but actually the dailies. The dailies are where it's really at. It might even be, we might even be. Oh, there it is. There's a tiny area here, little cross kind of area here, and when you kind of zone in, it's just below where price is. So this is another one that I'd be interested in some upside. We'll get to market dynamics, I guess maybe later when you've just given us a little bit of a rundown of what you're looking at. But yeah, I think there's some really interesting opportunities now, mate.
Yeah, look, it's been the dollar story, and everything's pretty much been the same thing. Well, I suppose dollar and yen, if I can put it that way, the dollar strength, the yen weakness. But there's also something crept in, to my mind, and that's the Aussie continues just to shed, not just against the dollar, but it seems a China story more than an Aussie story to me.
Yes,
and
agreed.
And we might come back to that, because it sounds very serious for the Australian dollar, to be honest.
Yeah, agreed, mate.
All right, let's have a bo peep here. And before you came in the room, I was just telling the guys that I have tightened my stops up fairly tight on gold now, because I agree with you. It's due. It's definitely due. Yeah. But the level I've got is around about 10.
The screen.
Oh, I just took the screen.
Oh, you did? Oh, maybe it's my system.
No, it's not saying that I have got the screen, so I'll try again. Or maybe I shared you on it.
No, it's okay, mate. I might have crashed, so I'll pop straight back in.
It's still telling me that your screen is on, but I can see mine. All right, I can see my screen on YouTube, so I'll continue. What I'm looking at with gold is this level here, 1904, and that was our second take profit level for no real mystery because of this low here. And if you look at that on the daily chart, as Ash just did, I think, there it is there, that's the level. And that's why I chose that level for our next take profit level, or as our last take profit level. And I see that very much as a retest area. So I'm expecting that to happen today, which is why I've left my stops here at 1911. Can't see my screen. That's interesting, because on YouTube, I'm seeing my screen. That's bizarre. Cheers, Daryl. So, yeah, that level there, I think, is the key today. And if that holds as resistance, then, like I said before, I'll be looking to short this again and add to the position, assuming, of course, that we don't get the trailing stop hit. So that's gold for me. But yes, I agree. It's very much due a pullback. Ash was talking about the Nasdaq earlier, and I pointed this out to you guys on Monday, that this looked exactly what I've just described as on gold, which is back here again. You can see the break of that level. I'm looking for this to happen, a bull bar today that hits that level and goes no further. Hopefully it'll hit my trailing stop. But I saw exactly the same scenario on the NASDAQ on Monday and pointed that out to you guys, that this looked very much like a break and retest to me. And that's pretty much how it's played out. Ash is long today, and I get that. If it goes back to this level and no further, then I'd be looking to add to that position, most definitely in the morning short. But if it reverses now, then all well and good, doesn't matter. As far as today was concerned, really, like I said before, I think it's a dollar story. And the dollar is, I won't say it's rising in agony, which is a great Japanese counters, rice counters. Yes, saying. I won't say it's rising in agony, but it's just continuing to, I suppose, leak to the upside. And it's not being hurt by any news that's come out. The news seems fairly positive. And this just, to me, looks like it's got plenty of room to move. If we look at that weekly chart again, we are, however, at a resistance level, which is the top of this descending channel, and also this previous swing high. So short term, today, I'm thinking probably a little bit of easing off for the dollar, but I'm not sure what news is due today. I think we had FOMC meetings.
Job numbers, mate. Yeah, that was yesterday.
Job numbers today. Yeah.
Yeah.
That was yesterday. So I'm anticipating that we will get a little bit of easing off of the dollar. This is the weekly chart I'm looking at. So I'm thinking a bit of easing off this resistance level, which, of course, speaks exactly to what Ash was talking about. It's a buy on gold, buy on the NASDAQ. Looks to be very much potential for that to happen. So I agree with 100% what Ash is saying. Medium to long term, I've got to say that the dollar has got further to rally, and for that reason, I'm hoping to stick in that gold position or add to it tomorrow. We shall see. And of course, I closed the silver position. Nice trade, that silver one. As far as today was concerned, couldn't see a whole lot, I've got to say. But here's what I could see. I saw the Aussie in all sorts. I don't know what that red line is there. It shouldn't be there, sorry. It looks to be in all sorts to me. It is at a support level, however. And further to the dollar story, if you're trading it against the dollar, maybe there's a room for a little bit of a rally, but I wouldn't be very confident about it. I think this is a China story. And China looks to be in all sorts as well. And look at Aussie versus the Swissy. It's just smashed through that level now. Aussie versus the yen coming off its high. Aussie versus the Kiwi holding ground, but the Kiwis as weak as, and in the same position really at the end of the day. But Aussie versus the dollar looks very, very weak, and wouldn't surprise me if we get down to, the 60-cent mark by the end of next week. Wouldn't surprise me one little bit. That level there is around about 61.5. So I'm really thinking the Aussie is down here at some stage in the next few days, maybe the next week. The Aussie pairs are really targeted, in my humble opinion. Like Ash, I've been waiting to trade CAD versus the Swiss long. I think the market seems to be in love with the Swissy for whatever reason, and they just cannot get off the bottom, these pairs against the Swissy.
There is support down there, though, isn't there, mate? I mean,
there is.
It continues to push lower. You look at it on shorter term timeframes, the CAD Swiss, and it continues to push lower. Yeah, the hourly's good. It continues to push lower, but then just it gets picked up again. Then it pushes low, and then it gets picked up again. It's I mean, it hasn't formed a bottoming pattern per se, but you're definitely starting to see that that there is just a little bit of accumulation going on down here. you know, with the Aussie kind of collapsing to the downside against the Swissy, and the Kiwi collapsing to the downside against the Swissy, and the CAD holding, I don't know whether that sends a specific message or not. It'd be you know, really kind of a guess, because I can see another level, another leg down, that is a decent support level below here. But this isn't a bad point to try and pick this one up. It's just we need to get through a trend line and hold it. But you know, we've got through a few trend lines. You look at it on the hourly, and we see there's one on that high on the 14th of August at 6 o'clock. Well, yeah, that one there is another one. You know, this we got through there, not able to hold it. We are kind of above that trend line, though, I suppose. So very difficult to kind of look at it on these hourly time frames. And I think if you don't want to get hurt on this one, you do need some wide stops. There's no question. You know, you need to look at it on a broader basis and just check the stops out with it, because I think that there's a decent chance this one does rally, of course, but it's where it rallies from. You know, does it rally from here or the next leg down? And the next leg down would coincide probably with another leg down with the Kiwi and the Aussie, and maybe all of them forming a bottoming pattern. But as I say, the fact that the Kiwis collapsed against the Swissy and the Aussie has, yet they are not really on strong strong support yet. There's another area that you pointed out, which I think you're absolutely right on with the Kiwi Swiss. When they get there, if the CAD is still here, then I think the chance for the CAD to rally against the Swissy from this point is very, very high. If the CAD it does start to come down, then I think we're looking at the next support line with the CAD Swiss to really kind of get some juice behind this one.
Yeah, look, I mean, waiting, and it just doesn't seem to do it. And the numbers aren't bad that I've seen coming out of Canada. So what? And look, I think you're spot on with you. I don't think it's a fluke by any stretch that the CAD is holding where the Aussie and the Kiwi are, the three Comdols. I think that presents us with a very good opportunity to trade the CAD versus the Aussie and the Kiwi.
Yeah,
I think it does. Probably gone a little bit at the moment, but not so much. I think it's still there. You know, there's still room to the downside on Kiwi CAD. Aussie CAD's probably gone a bit far. Hang on a sec. Yeah, like I said before, it's right on the support level, but support levels are sometimes made to go through. It's a big double bottom sitting there, and this is a big higher low. So it's really tough to short this. But from what I know of fundamentals, it wouldn't seem a bad thing to do if you get a rally. I'd be selling rallies here, I reckon.
Yeah, do you know? I think that's a really poignant point. Actually, is that you know, you would need to wait for these rallies, and I guess, you know, what's going on with the dollar. Interesting, really, the dynamic with the dollar. Just to kind of touch on it, I need to pop out just 10 minutes before we close up today. So, sure. Just to touch on the dollar. FOMC minutes yesterday expressed further hawkish tone from the Fed. However, I thought it was quite significant that we had these potential headwinds mentioned in inflation data, and that more needs to potentially be done. You know, down the road, they're looking at maybe more tightening, is what the Fed said at their July meeting. But since then, we've had inflation data, which does kind of ease things off a little bit. And also, there was two members that voted to leave rates on hold. So I think the market has overreacted a little bit to these FOMC minutes, which is why I think the Nasdaq is a buy, because I think it's kind of come down probably off the back of these FOMC minutes. But I don't think really anything was said that was any different than what they've been saying all along. You know, why are they reacting now? And they hadn't been reacting for the first 6 months of the year. You know, every time the Fed came out and said something hawkish, the market just went up again. The Nasdaq particularly just went up again. It wasn't bothered about what the Fed said. So why all of a sudden, are they kind of, showing this really big concern about this hawkish tone?
Good point. Good point.
You know, so I don't really buy into it. And also, what the Fed have effectively said is the same as they've said right the way through: we are data dependent. Well, we're getting data which is suggesting some disinflation. So it's not like we're getting, you know, things are quite as strong. The point that we're at right now with this dollar, I think is a really interesting one on the day. And the reason I think it's a really interesting one on the day is because the initial jobless claims have been a huge driver for dollar moves. Initial jobless claims predicted to come out lower at 240,000 from 248,000. All it needs is some further weakness in the jobs market for things to change. Now, two major dynamics have come to my attention just by kind of looking at different news sources. The first one is that there are savings which are effectively getting dried out, and when we get into the next quarter, the consumer won't potentially be quite as strong as it currently is. So this move in consumer kind of the consumer-driven rally is possibly going to be coming to an end soon, which puts the pressure back on further disinflation, possibly deflation. But let's talk about disinflation first. If we get that disinflation, then the Fed can probably put a flag in the ground and say we've probably got the victory that we need, and we can certainly start leaving rates on hold, forgetting about raising interest rates further. The other thing is that Walmart are going to be reporting today as well. What do they say about the US consumer? You know, we're talking about the biggest retail of its type, food retailer of its type. So if Walmart start to suggest that the US consumer is also weakening, that could be a forward indicator about what's going to be happening in the coming months. We've got until September. When's the next meeting? September? Is it mid-September or something for the next meeting? It's a long way. It's a fair way off.
We had one in end of July.
Yeah, and there wasn't one this month. Yeah, so I think it's mid-September. So we got a fair way off until the next FOMC rates decision. That means there's a lot of data that can come out between now and then. So the Fed's sort of saying, you know, that there are still headwinds about inflation. It's irrelevant because those headwinds may well dissipate over the next month. The data may well be enough to suggest that actually inflation is now going to curb itself down. What was it last time? 3.3%. We're 1.3% away from their 2% target. If we start to see under threes, you know, without them doing anything, would they really want to do anything if the US consumer is showing some signs of stress because of savings being drawn down and Walmart suggesting that they may be buying less? Would they really be that interested in raising interest rates? I don't think they would. I think that they would probably say, we've probably done enough, but they've got to leave the door open. You know, to me, that's all they've really done. They've left it open in relatively strong terms in their rhetoric. But I do think that the data really is the driver here, and I think that the overreaction in the dollar, just because of some words that were said a month ago, suggests that there's some potential for this dollar to turn around, the Nasdaq to turn around, and all these things to turn around over the course of the next couple of days. I'm not talking about we're looking a week or a few months out. I think over the next couple of days, and maybe even today, if those jobs numbers come out weaker, I think this dollar's coming to the downside today.
Well, I think the chart agrees with you. Yeah. It's at a resistance level. So, yeah, why not? Daryl's suggested that the Treasury yield is pointing to the dollar going to 104 or 105, which is kind of where my chart's saying ultimately, Daryl, as well. My rectangle is saying that. What do you say about that, throwing those yields in as well, mate?
Well, if you throw the yields into the narrative as well, what happened with the yields yesterday was that, you know, and into today, there's been a huge spike, but they're dangerous. You know, it is a spike. It's had a dangerous move to the upside. So, okay, yeah, I'd agree that that's where they're pointing. But could we really take the information from what happened on the Treasury yields over the last 2 days as the information that we need to sort of see where the dollar's going? or is it a possibility that it does the same thing as the dollar will do with the data, and actually those treasury yields start to ease straight back again if the numbers come out and they start to show weakness. So I'm not reading too much into that as a messaging right to as we stand today.
Yep.
I appreciate that the treasury yields has taken a shift upwards, but it was a bit of a spike. And if it's an overreaction, that's going to come and reverse straight away again. So I'm not so sure on that. I think that there is more twists and turns probably to come from the messaging from the data than it does from the bond market. Bond market looks ugly. I mean, you see the 2-year yield; it's near 5%. You compare that to the 10-year. 10 years, what, 4.5, somewhere around that area. So the yield inversion, the yield curve inversion, very, very dangerous looking for the US economy. When we're talking about recession, if those savings do dry up and those yields stay inverted, that really will start to indicate recession into next year. So I think that we can take something from the yield market, but not on just one day, not on one day spike.
Yep, cool. Okay. Another interesting one. Is it interesting? I'm not sure. Where are we? In August, September, October. So in about 10 or 12 weeks' time, maybe 10 weeks' time, we're going to be 1 year out from a US election.
Yeah.
Which is going to be an incredible thing if Trump actually gains pre-selection and he's in jail. What on earth could go wrong?
Well,
and how on earth? And that, to me, we've seen this before, but nowhere near as dramatic as what lies ahead of us. I mean, we have to cross that bridge when it comes, of course, if it comes.
Yeah.
But it will, to my mind, forget about treasury yields, forget about whatever else is going on. That's just going to dominate everything for so long. Whether it drives the dollar or otherwise, I think the markets will react in some fashion if he wins his right to challenge for the presidency a second time. What do you think?
Yeah, I know. I agree with you, but all that does, to my mind, is pushes us back to gold. And this is where I think looking at potentially gold going long is a really interesting position, because yes, I think you're absolutely right, mate. And I think that the dollar has been questionable for quite some time, and yet it is managing to hold itself on. If inflation,
I'm a massive dollar bear, massive dollar bear.
Yeah.
But at the moment, and as you say, for whatever reason, it's just continuing to find strength. And I think it's a sell, maybe at 106, something like that.
Yeah,
I really do. And like I pointed out on euro versus the dollar on the monthly chart, whilst ever that's still in play, this false break area, this bar here, I think that this is going a long, long way. So I think the timing probably comes from this chart, for me anyway. And if it bounces off 108, then I reckon the time may well be right. I could be wrong, of course, but that's what the charts tell me.
Yeah. That's the euro dollar. Yeah. Well, euro dollar does look like it's going to hit some downside there, doesn't it? That looks
It does, but only to here for me. You see, I've got that channel in place.
Yeah.
So I think it's only to here.
Yeah.
And if I'm wrong, then obviously we'll have to reassess. But at this point in time, I think it takes off from here again, and maybe it just keeps doing that until such times as the dollar does crash, that I'm thinking will happen. But like I say, I still think 150s are on the cards for euro dollar at some stage. Could be a while. Could be 2095, but all right, we'll get there.
Yeah, I think you're right, mate. Sorry, I was just getting distracted because I've just taken the Nasdaq long.
Cool.
I can quickly show you if you like, but actually you
Yep.
can probably bring it up on yours if you want.
Yep.
Up to you. I can take it or you can take it. I know you're still analyzing.
What chart?
If you look at it on the 15.
There you go.
Yeah, look at it on the 15, and you can see that we just kind of like managed to kind of like creep through that area. Maybe the inverted head and shoulders happens from here. Now, if it doesn't,
so you're playing the break and retest, right?
Yeah, basically.
Of the neckline. Yeah.
Yeah, basically. Yeah, I'm actually looking for this to be part of the right shoulder. So now you see that if you draw the trend line from below as well, the low on the 17th at 415.
You have it through there.
Yeah, there.
Well,
now,
there.
Yep. No, on the lowest points, mate. Yeah, there. Down. There. Now that negates that trick, because my idea initially was for us to be able to get down to that point. That's going to negate that trade. So I'm just going to take it from here, and the next drop I will look for is the area that I initially discussed. So so the trade is long from here with stops way down, because I'm looking at a much longer term time frame really with this one, and to hold on to it, see if this is a bit of a bounce area for the Nasdaq. If it doesn't bounce here, I'll leave the position on, and I won't take another position on that trend line, because this is this is now the trade in this area, and I'll look for another area slightly below where we are now, not too far down, but I think another 1% move to the downside with the price of the Nasdaq, I think is potentially on. So I'll going in light here, and then adding to the position one more time, and then stops down at a what are you at there? Is that 14,656 you got?
Nope, but I can make it.
14,8.
Oh, where you mean here?
The price 14,896.
Oh,
is it?
currently 14,899.
14,899. So if anybody's entering this one, my stops are way down there. They're down at 14,700. No, they're not. They're down at 14,500. So 300 pips below, but I'm looking for 6 to the upside.
You're about there. That look right? Stop loss about there.
Yeah, and the idea, if you also put a horizontal level on that that train tracks reversal that we saw back in 15th of June. Yeah, you see that's the other area I'm interested in the long. And if it comes down, then I'll wait for that to happen, and I'll add to the position there, leaving the stops where they currently are. Now the reason for that is that that is near enough a 1% move below that train tracks reversal. Now we might be slightly higher on the 14,500. It might be what's that, 14.7? So you're looking at 145 pips below that 14.7 area. So looking at 14,560, 555. Yeah, that's about there. That's where I'd want my stop to be.
Cool.
But looking at the trend line, looking at the monthly pivot and the trend line as a target.
This monthly pivot.
Yeah.
Trend line up here.
The trend line that you had coming from above, already on that chart. You had it already.
I was already there. That one.
Yeah, that one. Yeah.
Oh, okay.
Yeah.
The confluence here. Yeah.
Yeah. So that's the target for that.
Cool. I might have a look. You'll have to push off very soon, but that's all good. I'll continue on. Euro today. Bearing in mind what we've just been talking about the whole session, really, and that is that we're expecting dollar weakness today. This could still play out very, very nicely for us. And if you look at what Ash has just traded, this looks very interesting because it's very much the same. And I'll point that out. So you've got, first and foremost, an untested daily pivot. Then you've got a left shoulder, a head, and a lovely little level through there that should be, not should be, could be a potential right shoulder area. So this would be the play for me today on euro versus the dollar. Get something, and I only trade setups, so I won't be putting a limit entry or anything like that. But if I do see a setup that looks maybe like double bottom, higher low, then I can trade it. I would need to see a reversal bar that looks something like, that'd be okay, but I'd prefer it to look like that. Why? Because it's got a red body. That's important to me because it gives me some sort of insurance that if I'm wrong, price should just continue to go that way as it is in this situation. But if I'm right and price goes back to that level, it should go to the next resistance level, which in this case is the daily pivot. So if I can find a way in from down here, that makes that a pretty attractive trade. If I can get an entry here, I can get some profit in the bank here before we actually go through the resistance area. So I think that's the idea that I'll take into this evening and hope that we do get a setup. That'd be nice. Another way to have a setup here would be for a liquidity grab, as I call them, where this low gets taken out, but with a reversal bar. So something that looks like that maybe, with a long tail to the downside, picks up all that liquidity underneath. That would be awesome because there'll be sell orders under here, and that would be exactly what the buyer's looking for. So I think that holds true either way for me. If I get a reversal bar as a low test bar taking out all those lows, I think that would be tradable to the upside. And to pick up a right shoulder here with a nice candle pattern or something like that would be good as well. So that's where I'm at with the euro versus the dollar. I didn't have anything at all that stood out to me today. There was CAD yen, I suppose. We were looking for a long there. Let me have a look at CAD yen. Let me get rid of that to start with. Aussie CAD yen. The one thing I couldn't see with CAD yen was a decent reward to risk. And I suppose if you're a trend trader, or I don't know, Ash, this is probably a daily wave rider trade, is it? I would imagine. Long there today, would it be?
Let's have a look.
Oh, sorry, that's the weekly chart.
Well, what are we on the CAD yen?
Yep. The one thing I couldn't reconcile was that I'm trading at the highs. And I know the range is very, very small, but it's one of my things to trade long at support, not at resistance. And that's precisely where we are. So yeah. I don't mind the bar because it has cleared this swing high, but there is a little bit of consolidation going on here. So I think I'd much prefer to pick it up as a false break of support. So price back down to here somewhere. Give me a trade line here. Come and test the daily pivot. Back above the trade line, retest it. Then I can go get some profit in the bank at those highs. That would make sense to me. Really, I wasn't very interested in anything. All of the yen pairs are pretty much on their highs, as you might expect. The pound's having a whopper time at the moment. And that was what stood out to me more than anything today. If you look at pound versus the Aussie, that's a 30-minute chart. I think that's probably going to give you an opportunity. I'm not even sure it's possible to have a daily pivot test, to be honest. which is something that I rarely say. But such is the bad news surrounding the Aussie, and the pound seems to be pretty strong. It's impossible to trade, of course, because it's the NLNS situation. I can't go long here, and I can't go short because it's so strong. And that's the story with the pound at the moment. It's just so strong against just about it. And certainly the condols, again, as we mentioned earlier, Aussie, CAD and Kiwi. There's the Aussie. We've seen the Aussie, there's the CAD, and now look at the Kiwi. It's just skyrocketing, the pound.
Yeah.
Even against...
Sorry, mate,
mate,
just hearing you talk about the pound. You know, talking about the Fed fighting inflation. They're doing a terrible job in the UK. Wage inflation saw some further growth. We saw CPIs just to ease down, quite a lot actually, but still nearer 7% than 2. So way
yeah.
too high, way too high. You know, there's no way these guys are pausing.
No, which means the pound will continue, you would think, on a fairly strong trajectory. Yeah, which is very, very strong at the moment.
Well, incidentally, you know, if you want a kind of really obvious kind of differential between two central banks, RBNZ have now paused, and they'll probably stay there. First, you know, they've decided that's probably it. You know, they seem to be sort of like relatively confident. I read the rate decision report, and it seemed to be pretty confident. The BOE nowhere near pausing. Well, maybe they're near pausing, but they're not looking to be pausing. Difficult with the price. I mean, you know, I think if you were looking at this chart, the first thought is you've missed it. You know, yes. There probably is some more upside. I think from an intraday perspective, you know, if you were sort of like trying to take these trades on a shorter term time frame, no problem at all. You could definitely do it. But when it comes down to the major move, I think it has been missed.
Yeah, I agree, and that's what I was saying about the pound versus the Aussie. Pound versus the Kiwi is the same. I can't even see, as much as I would like to see it happen, I can't even see the strength in the Aussie or the weakness in the pound big enough to have a daily pivot test today. I just can't see that happening.
Yeah.
But, you know, as somebody who looks at charts, it's once again that situation where I can't buy and I can't sell.
Yeah, great.
So it's pretty much a day off for me, I think. The only thing I've got to monitor is gold.
Yeah, gold, very interesting. You know, if you bring gold in on a daily, and just minimize it a little bit, just so we can see a little bit more data.
I'll go over to this chart, which is a bit barer. I'll get rid of these labels, which I had to use the other day. Get rid of that. And zoom out.
Yeah, just zoom out a little bit.
That enough?
Yeah, I think it is enough, actually. Let me just see what I've got on my gold chart. Yes. Actually, our charts look quite different. That's interesting. Okay, our charts look very different. Where your second is at 1904? Your 1904.
That's my second target. Yep.
That's your second target. My gold price is actually above that by quite some distance.
Right now,
it's $25 above that. So my charts are suggesting that gold's got another $25 to come down. Now, $25 on your chart would lead you down to about 1870, I think. What does that look like? There, yeah. You see the little bump. Yeah, actually the gap there. That's where I you know, my charts are suggesting that we look for longs in gold.
Okay. Well, here's my target way down here.
Which is interesting, mate, because actually look at that bullish bar. You know, the gap that happened, and then the bullish bar on the left there. I mean, that is that should cause some support. There was a lot of buying there. A lot of very, very, very keen buying at that particular point.
Let me see if I can isolate why. That was the 10th of March and 13th, so it was over a weekend.
Right, sorry, mate, I've got to bump out because I've got to just drop Molly at the club. But
all right, buddy.
I will see you Monday. Thank you so much. No, I won't. I'll see you in a bit.
Yep.
I'll call you back in a bit when I get in.
Happy days. Right, bud.
See you guys. Have a good weekend.
Okay, so gold is super interesting, really is, and it's the only thing that's keeping me awake at night. Well, it's not keeping me awake at night. It's the only thing that's keeping me interested at the moment, to be honest. Apart from that dollar strength and when that ends and all the rest of it, because this, to my mind, and I've said this before, and if you haven't been in the room, I'll point out to you exactly how I see this, and it's all about recent history. High there, market dropped. High there, market dropped. A little bit further. High here, market dropping at the moment. Does history repeat itself and go that distance, or does it stop? Who's to say? But what if that sequence does continue? And we've got $390 pips high to low. We've got, sorry, not 390 pips, you know what I mean, $90. $445 high to low. And currently, we're only $170 high to low, $180 high to low. So is there any wonder that I have an open mind here that suggests to me if this sequence does continue, that we're down here somewhere? And that's exactly what I'm thinking. If I'm wrong, I'm wrong. Doesn't matter. We've banked a couple of times here and we're looking good. The trick, of course, is how do you protect what you've already got in the bank? And that's the thing that is pondering, it's keeping me pondering at the moment. So what I pointed out before, where all these retracements on a single day have occurred, and they're going more than 50% in most cases above the previous day, then if it goes beyond 50%, and certainly beyond the highs, I want to be out until the retracement takes place. And it could take place to here, way back to here. Don't care. I still will look for downside until proven wrong. And I'll be proven wrong, in my humble opinion, if this high is taken out. Because that coincides with here, and it means that this sequence and that sequence doesn't happen. That's what that will mean. Because the pullback here was never taken out. The pullback here never happened. If we pull back to this level and take it out now, then the downside is over as far as I'm concerned. But until that happens, I'm going to be a bear. So that's where I'm at with gold. Silver, different. You would think it'd be exactly the same. Actually, let's go to this chart. You'd think it'd be exactly the same, but it's not. Because if you look at silver, we haven't had that big triple top. We've had a double top. We've had one phase, two phases. And then we've had another double top, which currently is in phase two. Phase one didn't last too long. Then we got a big bull bar. Phase two, to my mind, is at pullback stage, where all these tails are, all these rejection bars are. And we had a break, retest, false break of that level. Didn't last long. So I still think there's downside, yes, but I don't think it's anywhere near as clear as what gold is. There's even an inverted head and shoulders sitting here. So this could actually rally as far as I'm concerned. I don't see the exact same thing that I'm seeing on gold. And that's why I closed the trade. Nice trade, but I think it was time to get out. And if things go the way we think they, or both Ash and I think today, then price could, rally, I don't know, maybe 50% into the move. I don't know. But to me, that cycle is over. And for that reason, I got out of the trade. Euro, is it going to set up for us? I don't think there's much point, guys, unless you've got any questions of hanging around too much longer. I'll go back to the dollar index. I think that's at a resistance level, so I think it's a sell today. Do I think it's a sell long term? 100% I do. And I think we're in a very, very strong position right now that if this level breaks, then this is going to go down to here. Short term, I think we're back up to here. So it's a very interesting scenario. Short term today, I think we're bouncing off resistance. So maybe down to the daily pivot till we hit this level, maybe down to the trend line. But I don't think we're going beyond there. Once we hit there, like I said, tomorrow, if we get a retest today of the pivots, back on tomorrow, in my humble opinion. If you look at the trend line to the upside, bang on where we are. So that channel and the trend line is suggesting to me that we've got a selling day today. We shall see. The only way I want to play that, as I said, is flip it upside down and on its head and trade the euro long to the daily pivot. But I want to get down here, right, on a small time frame, get the money in the bank really fast and call it a day, as I think I'm going to do, unless there is anybody who wants to have a chat or got any questions. Have we had a good week, folks? Should have. I hope so. Everything's been positive. EuroCAD, let's have another look at that. Yeah, it's still hanging in underneath our pivots, which is kind of where I've got my hat hung. And like I said before, if we're going to close above, then I will look to close the position. There's only one more form of resistance above those pivots, and it's either there, which is a nice confluence area, or there if it's above the pivots. I think once we're through there, we're in horrible trouble. So I won't let that happen. Yorick, my pleasure indeed. I hope you've gained something from the show. It's a little bit boring, the price action at the moment, to trade, in my humble opinion, but Ash has got one in the market, potentially two. I might have one in the market a little bit later on this euro versus the dollar approaches that daily pivot test. It's a beauty. That daily pivot test is very, very reliable. Righto, guys, that is it. Let's call it a week, shall we? And we'll look forward to your company again next week on Monday. And of course next Thursday as well. In the meantime, have a great weekend and we'll catch you next week. Thanks, Daryl. Bye-bye for now. See you guys.